Good morning this Wednesday, the 21st of August. I'm Grady Wolf, market analyst with Bell Direct. Wall Street's 8-day winning streak ended overnight as investors took a breather from the recent comeback rally after the early August mass market sell-off. The Dow Jones fell 0.15% on Tuesday, the S&P 500 lost 0.2%, and the tech-heavy Nasdaq ended the day down 0.33%. This week, investors are preparing for the Federal Reserve's annual Jackson Hole Economic Symposium, where Fed Chair Jerome Powell will speak on Friday. Investors are also likely to taking a breather from the recent equities rally ahead of the US Fed's latest meeting minutes out on Wednesday, US time, before assessing their next move in line with the rate outlook from the Fed at the latest rate decision meeting. Over in Europe on Tuesday, markets closed lower as economic uncertainty weighed on investor sentiment. The STOXX 600 fell 0.46%, with all but the automotive sector ending the day in the red, while Germany's DAX lost 0.35% on Tuesday. The French CAC fell 0.22%, and in the UK, the FTSE 100 ended the day down 1%. Germany's producer price index fell 0.8% year-on-year in July, while the inflation rate in the Eurozone was 2.6% in July, up from 2.5% in June, with both datasets weighing on investor sentiment on Tuesday. Across Asia on Tuesday, markets closed mostly higher, tracking Wall Street's strength on Monday, and after China's loan prime rates were held in line with expectations. Japan's Nikkei led the gains with a 1.8% rise, while South Korea's Kospi index rose 0.83%, and China's CSI index added 0.72%, while Hong Kong's Hang Seng fell 0.5% on Tuesday. Locally yesterday, the ASX 200 rose for an eighth straight session on Tuesday, closing the day up 0.2% above 8,000 points for the first time since early August mass sell-off. The RBA meeting minutes out yesterday revealed the RBA considered raising Australia's cash rate from the 12-year high 4.35% in August in a bid to return inflation to the target 2 to 3% range in a more reasonable time frame. The RBA also didn't rule out further rate hikes, which saw market gains ease in afternoon trade from the morning rally. The hawkish tone out of the RBA meeting minutes weighed on real estate stocks yesterday, with the sector posting a 1.55% decline, while tech and materials rally more than offset weakness among real estate stocks. Baby bunting shares soared 8.85% on Tuesday after the baby retailer released FY24 results. Investors overlooked the decline in sales, profit, and increase in net debt to buy into the stock on outlook for improved sales in FY25 amid cost-cutting measures and pro forma NPAT, or net profit after tax, expectations of between $9.5 and $12.5 million. Plumbing supplies giant Reliance Worldwide also rallied just shy of 9% yesterday on the release of FY24 results, including net sales growth of 0.2%. Investors also bought in on strong outlook for FY25 in anticipation for this company to form part of a group of entities that will benefit from an easing interest rate environment. On the commodities front this morning, oil is trading 0.41% lower at $73.36 a barrel. Gold is up 0.43% at $2,514 an ounce, and iron ore is up 0.3% at $98.10 a ton. The Aussie dollar has strengthened overnight to buy 67.39 US cents, 98.11 Japanese yen, 51.79 British pence, and 1 New Zealand dollar and 10 cents. Ahead of the midweek trading session on the local bourse, the SPI futures are anticipating the ASX to open the day down 0.55%, tracking the global market sell-off overnight. And now let's dive into some trading ideas for your consideration today. Bell Potter has decreased the 12-month price target on Mader Group from $7.60 to $6.80 and maintain a buy rating on the leading provider of specialised contract labour for maintenance of heavy mobile equipment in the resources and civil industries following the release of Mader's FY24 results. Near-term outlook is supported by mid-cycle fleet renewal in Australia and North America. However, Bell Potter's analyst is cautious that challenging operating conditions in North America may persist, which is believed to have driven management to announce a conservative FY25 guidance. And Trading Central has identified a bullish signal on nickel industries following the formation of a pattern over a period of 65 days, which is roughly the same amount of time the share price may rise from the close of 82 cents to the range of $1.13 to $1.19 per share, according to standard principles of technical analysis. And that is all we have time for this morning. Have a wonderful day and happy investing.